So the big question is this: how are real estate investors who don't have a ton of free time, don't have access to off-market deals, and didn't start life on third base, how do we grow a real estate business conservatively to support our families, finally leave the corporate rat race, and build a legacy? That is the question, and this podcast will give you the answers. I'm Ed Matthews, and this is Real Estate Underground.
This is the Real Estate Underground podcast show number 59.
Greetings and salutations, Real Estate Undergrounders. It's Ed Matthews here. I am joined by Anthony Walker. He is the Chief Investment Officer and owner of Cornerstone Commercial Investments. Anthony, welcome to the team. Welcome to the show. Thank you so much for your time today.
Thanks for having me. Couldn't be more excited to share some of my knowledge.
So, Coeur d'Alene, Idaho. Thank you for pronouncing that offline, because I would have absolutely destroyed that had we not had that first conversation. So Idaho, it's an interesting market, right? I mean, there's been a huge tech boom out in the Boise area, and
totally.
in your area as well, right? And one of the people that I follow very closely, Russell Brunson, is probably not too far from you.
Yeah, I mean, I love Coeur d'Alene. When I got into business, my own business, I tried to, if I want to start a business, where do I want to live? And this is where I live, because it's my dream location. I wouldn't want to be anywhere else.
God's country, right?
Absolutely. God's country is correct.
Yeah, that's awesome. So, proof positive, right? I'm in Connecticut and you're in Idaho. We're in the same business. Doesn't much matter where you live. It matters where you invest, right? And
absolutely.
So tell me about your business. How did you get started? What kind of drew you into the real estate world as opposed to some other entrepreneurial endeavor?
Yeah, really great question. I during probably freshman year of college, and I did the whole college route, thought it was the only way to succeed in life type idea, and I paid for my own college. And freshman year, I read classic Rich Dad Poor Dad and was like,
Bible.
That's what I want to do. I want to become financially free as quickly as possible. And I thought at the time actually it was going to be through technology sales, started my own tech company. So I worked internships at tech companies, graduated college, went and worked for a tech job, made like $36,000 a year. But I was like, man, I'm going to work my way up, get into sales. I was always good at sales. And then 6 months into that, and I said, you know what, this is the only time in my life where I have zero risk, in my opinion. Risk to start a business when I'm young is very little. I don't have kids. I didn't have, I wasn't married at the time. Right. And these things that you have, these different barriers. So I jumped right into wanting to get into real estate. Actually, I was going to start in wholesaling, but ended up getting my real estate license, sold a bunch of real estate. I formed a team with my now business partner, actually. We formed a team, sold about $100 million in real estate.
Wow.
Over a 2.5 year period. Just hustled. I was door knocking, cold calling, doing everything I could. I wanted to make money quick so I can become financially free.
Pretty good way to do it.
And yeah, totally. And my business partner at the time had a Cornerstone. And so I joined as the third partner, and we really scaled it at that point. We really started taking it off. And now we've raised just about $45 million. I don't sell real estate anymore, just focus as full-time chief investment officer, building a brand, trying to raise capital, trying to analyze deals. That's what I do on the day-to-day. And we're operating right out of Coeur d'Alene here. We've got an office, and we've built and developed real estate in Oregon, Idaho, and Montana, and we continue to do so.
Wow, that's phenomenal. So tell me about the types of assets that you focus on.
Yeah, so we focus fully on multifamily. So workforce housing. We're not doing anything subsidized. We're not doing any, Section 8 housing. We're also not building your beautiful, downtown luxury apartments. We're building that, we put quartz countertops type in our brand new developments. We're focused on that workforce, so 30 to 40% income, and we want to hold our assets for 5, 7, 10, even 20 years if it's an irreplaceable asset. So all our investors come in for that long-term, good, sustainable cash flow. We'll refinance 3 or 4 times in some of our assets.
That's excellent. And so when you go into a deal, are we talking about syndication, joint ventures, combination thereof, other models? I mean, how do your investors win?
Great question. So we got the 3 GPs. We do a lot of ground up construction. So the 3 of us are signing personal guarantees on the construction loans, and the rest of the capital comes purely from LP investors. So we have, people investing $50,000 and we have people investing $2 million, but all LP money. And then we manage the fund. We manage the entire thing. So all of our LPs are receiving completely passive income. We take care of everything besides, we wire the funds out once a month to your different accounts.
Excellent. And so you and I are in similar businesses, and that I'm in that C and B class workman's housing
Yep.
type of investments. And so, what drew you to that sector of the class? Why not A? Why not Section 8? Right.
Great question. I mean, our logo is an equity shield is what we call it, and it's to protect equity for our investors. So, that D class, stuff can have really good returns. It's also incredibly hard to manage. The tenants you're working with are incredibly difficult.
Right.
And then you get up to, A class luxury. Great. You can make a killer of a return on it. You can build it for maybe a little bit more, but you can get crazy good rents. But as we're seeing in today's market, at least in our markets and other markets we study, let's take Boise even, for example, those are the first ones, people that have higher vacancies. I've looked at apartments that have 10% vacancy on luxury property now. So your profits can be higher, but you can also, during a down market, go down. So we focused fully on workforce housing because it's the least volatile. So when we're, in this market, when, the Fed's trying to increase rates so people can't buy houses, they're trying to, increase unemployment, we're still have all of our units rented, and we're going to be able to ride out this volatility wave. Even if we lose equity because, cap rates went from a 4 to a 5, great. We're still seeing a 7, 8, 9, 10% cash on cash return. So your original investment is still getting money on that. So that's kind of our bread and butter, is to ride out volatility and be that equity shield for our investors.
Yeah. So you and I think alike there. I mean, the fact is that, when you look at 2008, 9, 10, the properties that took a beating were the Class A properties, right?
Totally.
And I mean, admittedly, B's and C's did as well, but from a stability perspective, you can't beat, a strong Class C neighborhood because, those folks, they're good, hardworking folks, right? They crank your wrench, They crank a wrench to fix your car. They pour your coffee at the local diner. They, cash you out at Target. And they probably have, one person probably has all three of those jobs, right? So they're working their butts off.
I mean, my business partner during the recession you referred there, people can hold off for a while. If they're going to live at mom and dad's, they're going to have a roommate, they're going to have, whatever they need to do, rent a bedroom. But that bubble keeps on getting bigger and bigger. So during the 2008 recession, rents went down a little bit. But then look at 11, 12, 13, rents went up significantly because that bubble burst. Talk about real estate bubbles. There's also renter bubbles where people have to get out of the house. They have to transition for housing. And when all that demand hits the market at once, it pushes up demand. And my business partner had some assets during that time, and they were maybe flat during 08, 09, but then they went up significantly over like a 5-year period. His rents almost doubled. And I think we're going to see the exact same thing. We're seeing it right now. We've got about a 6 to 12 month lag where people are holding back. People are staying at home longer. Like I said, they're, they have their roommate, but they're, when you get married and you have a married couple living in a 2-bedroom, 2-bath, they're going to want to split eventually. And that bubble is going to burst. Maybe it's this year, maybe it's next year, but we're going to have that demand pour back in the market and increase rents. So that's why we love what we do.
Yeah, here in the Northeast, we're seeing that exact phenomenon, right? It's not that, rents have, I wouldn't say doubled, but they've certainly increased, depending on the market, 8 to 12% year over year for the last couple of years. And, if you listen to like Moody's or some of the other economists, they're saying that it's not that rent is going to go down. It's just going to stop growing as fast.
Yep.
And that, that is music to my ears and our investors' ears, I'm sure like yours as well. In that, it's a nice stable, we're still making money. We're still able to fund those businesses so we can provide a clean and safe place where people are proud to grow, to raise their family.
Totally. I mean, we underwrite all of our deals on a pro forma at a 3% rent growth. We basically, if we can increase 3%, that's the inflation rate. And if we have 60-40 debt, great. They're going to really, the asset's going to appreciate it, let's say 7, 8, 9% a year. Great. We're killing it for investors, plus cash on cash. We have a great IRR. That's what we underwrite our deals. If we overperform that, and ideally we will, our investors are happier, we're happier. But we underwrite every deal at a 3% a year rent growth. And some years they might go up 10%, and some years they might go down 5%. But overall, if we can hit that, and we sell in 10 years, then our investors are going to 2, 3, 4x their money.
Right.
So
everybody wins. That's good.
Yep.
So let me ask you, from an entrepreneurial perspective, one of the things that I'm intrigued by, our pre-show conversation was, the person you have to be, like the person you have to become in order to be an entrepreneur and to succeed at whatever business you're in. And so I'm curious what your thoughts are on that.
Stay with us. We'll be right back.
A motivated seller just filled out your web form. If you call back within 5 minutes, you're nearly 4 times more likely to get that seller appointment. But delay your follow-up by even just 10 minutes? Forget it. You're toast. Ella Vista Connect calls that lead back in 60 seconds, qualifies them, and schedules your meeting. Find out how much slow follow-up is costing you. Free calculator at ellavista.com/underground.
Great question. So a lot of people look at me as, I'm 25 years old. I'm young. I'm raising capital. I'm managing this with my partners. And, they think, oh, gosh, he graduated high school just a few years ago. But really, it started 10 years ago when I bought my first car and I flipped cars, paid for all of my college flipping cars. And, I've been working on this entrepreneurial journey for 10 years, building this mindset. And really what it takes, I think, for a successful entrepreneur is, someone who's just getting into it. They're like, oh, I'm motivated. I'm ready to go. I'm motivated. I listen to this motivational speech. But all of that is such short term. It's the discipline that really gets you from point A to point B. It's if you want to start a business and you have no money, it's be willing to, my first apartment when I moved back here, I was renting a bedroom for $350 a month, and my expenses were $1,200 a month, and now I've raised $42 million and I'm doing much better. But I had the discipline to ride those waves out. Also the discipline to get in the office at 5 a.m. a lot of these mornings and work those, first 3-4 hours of just focused time. So if you want to be a successful entrepreneur, what I believe is discipline. Discipline gets you from point A to point B. When you get to point B, it's the discipline that you really want to have is what gets you to point C, which is when you have real wealth, financial freedom, and that abundance that every entrepreneur wants, that abundance, that beautiful lifestyle. They want to take a month off of work, whatever it is, but it takes discipline to get there. And that's what offsets people. Most people, 99% of people, I'd say, 1% of people are successful entrepreneurs because of those 99% don't have the discipline.
Yeah, they're not willing to make that sacrifice, right? And,
nope.
One of the things that we focus on in our house is, we don't live above our means. We pay our bills and, but we don't have, really fancy cars and a giant swimming pool in the backyard. And, we go on trips, but we don't go on, we don't fly first class. We fly coach, right?
Exactly.
Man, I'd love to fly business class or first class. I'm a 6'4". I don't fold into seats very well.
Yeah, I'm 6'3". So
yeah, so there you go.
Agree more.
and so, but the fact is that it's not about that, right? It's about making small sacrifices today so that 5, 10, 20, however many years out.
Delayed gratification.
Totally.
Exactly what it is. Delayed gratification. If you can sacrifice today, so one day you can fly first class, as long as you don't try to, put those in there and try to sneak it in there, it's really going to pay off in the end for most entrepreneurs. And that's, instead of flying first class, you can hire a new employee. That's the mindset you have to switch to as well as from an employee to an employer. And that's the biggest thing.
And you mentioned the Purple Bible, Rich Dad Poor Dad, a while ago, and that was one of the things so I read that book in 2008, and I think 2008, and the thing that one of the major kind of nuggets that I took away from that book was, don't buy stuff to make you feel good, right? Buy assets that can then turn around and pay for the stuff you want. Right.
100%.
Yeah.
I mean, and I do the same thing to this day. We're buying an asset or we just bought an asset, and the cash flow from that is what, I needed a new vehicle. Now I have cash flow from my investments. It's going to buy for and pay for that new truck for me. And so now my equity in that's going to continue to go up. But that truck, as you know, trucks lose value, but great, that's being paid for by my cash flow. So now in 10 years, when I sell that asset and I, say I have 100,000 equity, I'll sell it and pull out 300,000 and my truck will be paid for from the cash flow.
Right.
Win-win situation.
Yeah. Yeah. It's so funny. You and I think almost identically. I drive a Ford Explorer with about 85,000 miles on it.
Yeah.
And I love it. And, and it's fine. I'm hoping to get 200,000 miles out of it.
100%. I'm the same way. I mean, I I had an old Chevy truck that I drove until, recently, and I upgraded to a newer Chevy truck, and I'll drive that one for quite a while, and ideally I have delayed gratification now. And of course I want the life where I can go buy a new truck whenever I want type idea. But right now, as an entrepreneur, when you're first starting out or when you're growing your business, it's about those delayed gratification moments of sacrifice. And in 10, 20 years, I'm going to live the life of my dreams. And I'm already living the life of my dreams. I also would love what I do every day. I couldn't be more excited to go into the office. And I think that's the other side of it too, is if you don't enjoy what you're doing, you're going to find burned out. So you're going to get burned out on whatever you're trying to do. So, find passion around whatever company you want to start or whatever you're doing in life.
Yep. Yeah. The legend of Steve Jobs, the Apple founder, one of the things that I allegedly he had was a sticky note on his mirror every morning that asked the simple question, are you excited about today? And, when he answered that question, honestly, to himself, it was just him and his toothbrush. Right. And, there's no hiding when it's just you. Right. And, but to be able to ask that question of yourself every day and, figure out, okay, am I still passionate about what I'm doing today? Right.
Yep.
And if you are, fantastic, go head first in. Right. If you're not, I'm out. You don't have to break rocks for a living. Right.
Totally agree.
This new economy provides so many opportunities for entrepreneurs, between the gig economy and the real estate economy and, all the other entrepreneurial opportunities out there. Do what you love and figure out a way.
100%. 100%. And I think that's where people are starting to realize that, the Fed's doing everything they can to lower unemployment or to increase unemployment, I should say, to, have lower amount of jobs. But, you see all over the media that, Facebook's laying off people, Amazon's laying off people, but unemployment doesn't go anywhere. It's because there's just that many people hiring, but also you're talking about the gig economy is no longer does someone need to go and find somewhere else to work. They can continue to work or they can go find a side hustle online. And it's a whole different world than it was even from the last recession in 08.
So true. Yeah. So this is professionally, I think it's my third real recession. And I'm kind of mushing together this coming 2023 recession with COVID, right? I think that's one big economic event. But the thing that I've also realized is that it's a tremendous opportunity. And you touched on it a minute ago that, when someone gets laid off, it has nothing to do with talent. It has a lot to do with how much we're paying you and were you in the door last, right? I mean, it's really that simple. And so there's a lot of talent that gets when Facebook lets 10,000 people go, 9,500 of those people are really good at what they do.
Could not agree more. I mean, one of the biggest pieces of advice I was given about 6 months ago with this impending, recession, whether or not we're in a recession, I think we're in a recession personally, but one of the biggest pieces of advice that I was given by someone who manages almost 10,000 apartment units, does incredibly well, was that, Anthony, if you're going to hire anyone, look at hiring them over the next 12 to 18 months, because he's like, that's where I found my CFO. That's where I found my CEO. He's like, that's where I found these most talented people in his business all came out of the last recession because they were laid off, their job became obsolete, or simply that there's going to be people scared in these businesses. If you're in a really successful business, you realize you're over leveraged, you're probably going to start looking for other jobs. If you're like a CFO or something, you can hire them into your company. They know how to manage a massive portfolio and you're just a small piece, but they're also going to give you that mindset to grow into the massive portfolio. And that was the biggest piece of advice. He's like, the best investment you will make over the next 12 to 18 months is who you hire. And I would encourage anyone to take that exact same mindset with them.
100% agree with that. The person who runs our operation, so Tori Jenkins, she is amazing. And she worked as a marketing person, a merchandising person in the retail space, and COVID hit and nobody was going to the malls anymore. So they cut Tori's team. Right.
Yeah.
And I jumped on the opportunity to get her in here. And she had nothing to do ever with real estate, but she's rocking 150 IQ. She's a hard worker. Wow. There's nothing she can't figure out. And I just threw a bunch of stuff at her and said, okay, let's figure this out. And just that act, and we pay her well, but she's worth every penny, and I probably shouldn't say this
Yep.
publicly. She's probably worth way more than we're paying her. But so hopefully Tori doesn't listen to this episode.
I mean, it's great. Every employee should be making, 5 times what you're paying them type of deal, and
Right.
benefit to the company, whether or not that comes in profit, but they, the revenue increase and whatnot. And they should. And this year we're looking at hiring like a vice president of construction, a marketing manager, and some other roles in our business. And I couldn't be more excited because I just think there's going to be, especially in like construction and development, as single family homes have slowed down, I think there's going to be massive opportunity for us to find some
100%.
crazy employees that we'll have for the next 10, 20 years who will grow our business
Right.
from point A to point B.
Yeah.
So.
And they will also, rock, as David Green says, rock stars know rock stars, right?
Yeah.
And so, those people you bring into your culture, they also know really good people.
Yeah.
And so as you continue to grow, you can not only, take advantage of, downturns in the economy to hire really smart people, but you can also find really good people through the people you already have hired, right?
Yep.
And so it just becomes this snowball effect that is, can really help you scale your business very quickly and very efficiently. So
we couldn't agree more.
So, all
yeah.
right. So one of the things that I'm always curious about is how executives like yourself take in information, right? I'm an old guy, right? I'm in my early 50s, and there's something about that tactile turning of a page that still gets me juiced, right? And and then I see other folks around me, and I read electronically as well, but that take in information via audiobooks or just on a tablet of some sort.
Yeah.
Or listen to podcasts and YouTube videos and all that. So, it's the old axiom, leaders are readers, right? And I kind of think that means a lot more than just turning the page on a paper book.
Yep.
So what kind of information, how do you take in information, and what are you paying to, what and who are you paying attention to these days?
Great question. So how I take in information, I've read a lot. I've read Rich Dad Poor Dad, Think and Grow Rich, and I'm constantly reading a book, but I'm not a finish a book a week type person.
Yeah.
I'm the person that I go to the gym every morning. I listen to a podcast while I'm going to the gym, at the gym, leaving the gym. If I'm in the car, not on a phone call, I'm listening to podcasts. I've probably, I first got started listening to probably 500 episodes of Bigger Pockets. Now I've, graduated to probably some higher level, like in-depth stuff, or just, really mindset, becoming a better leader. But podcasts are by far the number one thing that I listen to. I'm obsessed with podcasts. The biggest ones that I'm listening to right now, I love Ed Mylett. I just think as he is as a person, the mindset he puts into you is great. I've listened to a lot of Alex Hormozy and Layla Hormozy. I mean, Layla just launched Build, which is all about running a $100 million business. And me as a leader, executive, I want to know how to run a well-efficient, well-oiled machine. So I'm listening to her and her new content she's putting out. And it's been really good. I mean, she's 28 years old and worth over $100 million. She's done something right in her life.
She has.
The other person, I still listen to a lot of Brandon Turner. I could not be more excited for the podcast he's about to launch.
Yep, me too.
I don't know if it's going to be named, but he's going to do a lot of personal branding, a lot of real estate, and then just really in depth, real estate. And I pick and choose. There's some real estate ones that I listen to. I try to get the high level stuff. I don't want to sound, anything condescending, but I want, the high level ingrained stuff because I understand numbers. I understand, managing assets.
Right.
So I'm listening to Ken McRoy and the real estate syndication show, but I'm picking and choosing from a little bit of those, whichever the titles, which that's why titling a podcast is so important. The title speaks to me, I'll listen to it type of deal.
Right. Yeah. So I read books similarly, right? If a title catches my eye, and then, so I was an English major in college, so I'm a little snobby when it comes to reading. And so I'll read the first page, skip through the introductions and prefaces and all that. But, I'll read like the first couple of paragraphs of the first chapter. And if it grabs me, I read the book. If it doesn't, I don't. And the same thing goes for podcasts. I listen to the, I actually try not to listen to the first edition or the first episode of a podcast, because I think it takes, 30, 40 episodes to kind of figure it out, as a host. But so I listen, I arbitrarily pick one and I listen to it. And, if they hook me in the first couple of minutes, I'm going to binge the whole darn list.
I love it. Yep.
Yeah, so same. So
awesome.
So let me ask you, when you're not talking about real estate and saving the world from homelessness, what else do you like to do?
Yeah, I'm pretty basic. I'm young, so I have a lot of time to focus on business. So that takes up a majority. But I kind of have, like I say, like my big four. You got real estate, of course. Then I've got family and friends. I spend a lot of time, whether it's with I think, I realize I have limited time with my family and stuff, especially my parents. They're, my dad just turned over, 60 years old. So I just want to spend time with them, make sure I'm there for them, friends and family and friends as well. And then outdoors, I love boating and skiing. I think that's just I live in Coeur d'Alene for a reason. It's because I love the outdoors. Right? And then traveling, if I'm not doing any of those three things, I'm, want to jump on a plane and go to California or Scottsdale or Cabo type idea, or just drive, to go skiing at Big Sky, Montana type idea. So those are my big four right now in life.
Excellent. Yeah. You certainly live in the right part of the world to be able to go that, right?
Well, I live here.
Yeah. Right. By choice. Are you from that area, or did you relocate there? I'm just curious.
Great question. So my whole family is actually from Gilroy, California.
Okay. But Garlic capital of the world.
Garlic capital of the world. But I'm the youngest of 5 children. And when I was 7 months old, so I don't even remember it, my parents said, we're not raising a family in California. We're not raising a family here. We wanted a peaceful, slower bit of, life, quit some good jobs down there, moved up to Sandpoint, Idaho, which is even farther north than Coeur d'Alene, smaller town, bigger lake. And they've lived there ever since. They bought some property and have lived, a more peaceful, I would say, lifestyle, and they won't turn back at all. So
sounds nice.
I grew up in, Coeur d'Alene, not Coeur d'Alene, sorry, Sandpoint, went to school, University of Idaho. So I have Idaho, moved for a little bit, but then came back just because it is so beautiful here. I grew up in Sandpoint, which is much different than Coeur d'Alene. I live in Coeur d'Alene now, but you just can't get enough of. I think it's the most beautiful place I've ever been to. So.
I love that entire part of the world. I can't say I've been to Idaho. I've been there once, but I have been. A very close friend of mine lives in the Park City area, and I tried to get out there. And
Park City is gorgeous.
Yeah, and I imagine it's very similar. So
more trees.
Yeah, right. So Anthony, when if somebody wants to get a hold of you or wants to learn more about some of the deals you have coming up in this coming year, what's the best way to reach you?
Yeah, I'd say my 2 biggest presents, I'd either follow myself on LinkedIn or Instagram. You can just type in Anthony Walker 18. You'll find me, or visit our website, www.cornerstonecommercialinvestments.com. And my phone number's on there. You can reach out, schedule a meeting with me, whatever you feel like doing. But I'd love to talk with you if you're interested in investing or anything like that.
Excellent. Well, Anthony Walker, thank you so much for your time today. It's really nice to see you. And at some point, I'm going to invite myself out and we're going to go skiing together.
Please do. It's a pleasure to meet you as well.
All right. Likewise.
All right.
Thanks, Anthony. This has been the Real Estate Underground Podcast, a Clark Street Capital presentation. Thanks for joining us. If you're enjoying the show, please remember to subscribe and share it with your friends. If you'd like to learn more about Clark Street Capital and our upcoming projects, please join our investor club at clarkst.com/join. Until next time, happy investing.
This has been the Real Estate Underground. Don't forget to subscribe. It helps us grow. Until next time, Undergrounders, remember your real estate journey begins with a simple step forward. Now get to it. Bye for now.